I just took a trade that comes from one of the most profitable trading opportunities ever discovered. And it wasn't discovered by an algorithm, and it wasn't discovered by AI. It was discovered almost 100 years ago in a book called Profits in the Stock Market. This is the book. It was originally published in 1935, and I've got the book here. Now, many traders think that they know the pattern that I'm going to talk about here, which is called the Gartley pattern. And they draw it with Fibonacci ratios and neat harmonic labels and all the rest of it. But when you actually open the original book, none of that's there. What H.M. Gartley really described quietly in a section called One of the Best Trading Opportunities was literally a moment in the market where risk collapses, the crowd runs out of energy, and professionals step in while everyone hesitates. And in this video, I'm going to show you the exact passage where that idea lives, why it later became known as the Gartley 222, and how a behavior-based concept turned into a pattern that traders, including myself, still use today, and I'm literally making money in this very video on this pattern. Gartley built this pattern recognition machine in his own head, decades before computers. And it's crazy that Gartley analysed markets by hand. No indicators, no backtesting software, no shortcuts. He literally drew these patterns by hand and discovered all of these patterns from his own research. And he spent years drawing thousands of charts and making diagrams of swings and reactions and volume changes, and then watching patiently how price behaved. He wasn't looking for patterns that look good on a chart. He was just looking for where effort stopped producing results, volume dried up, and then where price retraced just enough to restore confidence, and then where risk could be defined with surgical precision. And that's why when you read this book, it doesn't really read like a strategy, it reads like a field study of market behavior. And if you're into trading psychology, this is incredible. When he was doing this, he probably wasn't asking himself, does this pattern work? He was probably asking things like, what happens before a low risk opportunity can even exist? And when he found those conditions repeating across different markets, across different cycles, he wrote them down very precisely. But the thing is, he didn't really name them, which is why nearly a century later, we're still trading the same behavioural sequence, just with more colourful drawings and fluffy names. But here's the pattern he was describing. So on page 221, he starts talking about this best trading opportunity, and he talks about A to B legs and B to C legs and extensions and retracements. And on the diagram on page 222, which is why it's known as the Gartley 222 sometimes, Figure 27 shows the diagram of these extensions and retracements. And you can see there's an impulse leg, and then there's an A to B, B to C, C D completion, and you sell at the D completion. Later on, there was a guy called Scott Carney who added Fibonacci ratios to this pattern, and since then it's become a well-known popular pattern in the trading community. So what I want to do now is I want to take this concept from this book and I want to dive into the charts and look at one playing out right now to see if we can make some money. So let's go. So now let's take a look at a real live example that's playing out in the market right now so we can follow along and see how we can use this pattern to profit. So before I get stuck into a setup that I'm looking at, I want to just kind of go over what Gartley said about the discovery and the findings around this particular pattern. And by the way, if you're more interested in the psychology behind the moves and why the markets move these ways, I recommend another book called Trade What You See by Larry Pesavento. It's a really great book if you're a psychology geek like me. But first of all, Gartley said that the discovery was that if we were trending upwards, right? So let's just say we're trending, and then we need a anchor leg, like an initial leg, and then we're waiting for a pullback, and that pullback needs to be a 618 retracement from the X to A. So if we label this up, this would be X, okay? This would be A. Whoops, let's just get that off of there. Let's move this down here. That would be A. And then we'd have our B leg here. And then we stop looking at that B leg once we start to see the retrace down to form the C leg, okay? And what he's saying is the B leg has to be at least a 618 retracement from X to A. So you can see we've just tipped that, so it has to touch that, and it can't touch the 786, because once we get into the 786, we get into the realms of another pattern called a butterfly pattern. And if you're interested in these ratio patterns, by the way, we teach all of these over at Tier 1 Trading. We give you all of the downloads, all the rules of engagement, how to optimize them, and how to make them wildly profitable, including the cipher pattern, which was discovered by Darren Oglesby, who was one of the co-founders with me and Akil over at Tier 1. Anyway, so once we've got the B leg, we're looking for a C leg, and the C leg has to hit a 618 retracement of A to B. So again, we bring on the ratio tool, we go from A to B, and we're going from the lower the candle to the higher the candle, and we want at least the 618 to be tested for this to be valid for a Gartley setup. Now, the only other rule around this is it can't violate A, so it can't close or push beyond A in any way. So it has to hit the 618 as a minimum, can't push beyond the A point. In other words, it just needs to be higher than A, right? But at least the 618. Once we've got that, we're good to go. We start looking for, let's label that up, C. Okay, that's the C leg. And then what we're looking for is the D completion up at the 127 extension. Now, some conventional Gartley setups, like mentioned in the book, he talks about the 786, where we're looking for the 786 retracement from X to A. The other conventional way is the 127 extension from A to B. So you're looking for that 127 from A to B, which is, if you can, usually the conventional Gartley, you see the 127 extension from A to B and the 786 from X to A line up at the same level. I like to use the 127 extension always, because we get a better completion, a higher completion rate. Let me explain what I mean by that. There are deep Gartley patterns and shallow Gartley patterns. And what that means is, because the D completion is a 127 extension of A to B, we want that to be as high as possible, really, because we want it to be close to X. Because if it's close to X and we're shorting at D, it means that our stop loss, if our stop loss is 10 pips above X or 20 pips above X, or, like what a lot of Tier 1 traders use is the 113 inversion, we stick our stop loss at a 113 inversion. Well, what that means is you're getting a tight stop as opposed to your 382 target from A to D. So we've got our target at the 382 here. And we've got our stop loss at a 113 inversion. And you can see that's a nice 3.4 to 1. And the reason that would be a nice completion point is because the B leg pushed right up high, almost to that 786. The closer to that 786 the B pushes, the higher the completion point is going to be. Therefore, the better the reward to risk profile it's going to be. But if it's just this, if it's just here, like this 127 extension here, let's just say we've got a B point here, A point here. The 127 extension is here. Well, that's a 1.1 to 1, okay, which is still above a 1 to 1. But sometimes you might find that it's an inverse risk reward. If we only just hit the 618, you might find that the D completion's down here where it's under a 1 to 1. So you might have a rule where if that's the case, you have to wait for a 1 to 1 minimum. Okay, so once we've identified the pattern, X to A, A to B, B to C, CD completion at that 127 extension, then we're good to go. Now, you can download all of the rules of engagement that I've been over in a little cheat sheet in the description of this video, so go and get that. But let me show you a real trade setup that I'm looking at in the markets right now. This is the pound yen, and I was looking to short this earlier on this week actually, and I couldn't get in on this short because the rules of engagement weren't met for my double top. And the level that I was looking at, I'll show you the trade. The level that I was looking at is this previous, you see this previous resistance level. We blasted through, then we came back down, and then we saw some resistance at this level. This level here is what I was looking at, right? So this is the weekly time frame. I was looking at this level for a potential quick in-out short, a high probability move. And we started to see this following this big bullish run, which was nice. RSI started to push overbought, and then we saw this deceleration with this lovely rejection candle on the weekly. But what happened this week is on the daily, you can see that we started to run out of steam here, and we had basically a double top up here. See this double top? we had this double top, beautiful double top, massively overbought on the RSI on the initial test. And then we had divergence on that RSI. We had equal tests of price, or that's what I was looking for. But if you look at it carefully, you'll see that we didn't quite, I'll drop down to the 60 for you guys. We didn't quite test that initial test. See that? We didn't make it. I needed this high to be tested up here, and we didn't quite make it. So my rules weren't met. Therefore, I couldn't take the trade. I missed out on this massive rollover here, which admittedly, I would have only taken targets at this red line. That's where my initial targets were at 212.23. But I still missed out on the profit. And now what's happened is I've started to look for other ways that I could potentially get involved in this short, other tools that I've got in my toolbox that will allow me to get into this trade so I don't miss another move. And one of those situations is a Gartley pattern. So remember the rules. We're looking for our anchor leg, right? X to A. So we'll mark all this up as we go. So we've got X, right? We've got our A down here. And then we're looking for our B leg. And remember, to get a valid B leg, we need a 618 retracement from X to A, okay? And we can't touch the 786. Now, if you just draw this on, you're going to see that we don't touch that 786, but it's really deep. See that? So if I bring on my triangle tool here and I go from X to A to B, it's just below that 786, which means it's a really deep B leg, right? Which is good. If you remember what I just said about deep B legs, we got a deep B leg right here, okay? Once we got the B leg, we're looking for a 618 retracement from A to B for the valid C leg. So we bring this on here. From here to here, you can see we hit that 618. Great. Amazing. A, B, C. And now what we're looking for is a 127 extension from A to B. So we go from A to B, back down, and we're looking for that 127 extension, which is up here. Okay. And because it's a deep pattern, what you'll see is if this is our X point, you can see our D completion is just below it, right? Really high up with the X point. So this is our D completion for the Gartley. Bearing in mind, this was, written about in 1935, almost 100 years ago. This is a perfect way in order to trade this move, get involved with this move by using this consistent set of rules that allows us to do the same thing over and over again with a positive expectancy. Okay, so this is where I'm looking to get involved. Now, how will I actually get involved with this? Well, I can set a limit order here. Because this is on the 4-hour time frame, I'm going to have a little bit of time, but I can set a limit order right here. Okay, so this could be a limit order, a sell limit order. Set your position size. My stop loss will go a 113 above X. Okay, so we can see that 113 there. If I just copy this, put that at the 113 right there, plus front running a couple of pips, and I can color this one, let's color this one red, and then my target is going to be a 382 retracement from A to D. And remember, if you watch my bat pattern video, we roll the targets with price. So if price pushes beyond this D completion, we just continue pushing this up with price because we're still looking for that 382 move. So this would be where my target goes at the 382 plus front running, and then I'll color this, say green. Okay, and then I'll scrubble this off, scrubble this off, right? And there we have it. A lovely, clean Gartley setup. Risk reward profile will look like this, which is a best case scenario, which is going to be a 2.5 to 1. So that is a lovely way to demonstrate a Gartley pattern. I'm going to end the video here because this may or may not play out, and if it doesn't play out, then it's not a valid setup, and we can't use that to get involved. If we do get involved, then I will maybe do an update video on that then. But I want you guys to follow this along, go and watch this market, see what happens. And also, if you are using a Gartley pattern as your entry into this longer term play, you might just use the Gartley as an excuse to enter and then maybe take half your position off at the conventional entries, or you might and trail your stops to secondary targets until you get stopped out. Or what a lot of traders like to do is have 382 for target 1, and then they set a target 2 at the 618. All right, so it's just getting towards my bedtime, and this is the 4-hour time frame, so I'm going to set a limit order on this trade. I'm personally just going for 1 in, 1 out, so 1 target, but because it's the pound yen, you can make a great amount of money on this pair just because of the ATR, the pip value. So I'm entering on 214.10. This is a limit order, so it's telling my broker that if market pushes up to 214.21, sell me into this, put a sell position on at a particular position size. My stop loss is going up at 214.76, which is a very tight stop loss as opposed to the 2.5 to 1 reward to risk profile. So I stand to make on this particular trade just over $7,000. That is the Gartley. Let me know if you want to see more videos like this. Again, if you want the download for this, you can go in the description and grab it. Plus, go over to Tier 1 Trading, where you can learn about all of these ratio patterns, plus many, many more strategies, and watch us trade them live every day. So until next time, take care, and I'll see you then.